Welcome to the Deep Dive. Today we're zeroing in on Nomura Holdings.
That's right. They're coming up on their 100th anniversary next year, 2025.
Exactly. And we've got their 2024 integrated report right here. We want to basically dissect it for you.
Yep. Understand the different parts of their business, how the numbers look, and what their plans are for shareholders.
They've also got this new group purpose. We aspire to create a better world by harnessing the power of financial markets.
Mm-hmm. So we'll see how that translates. Our main source is this latest integrated report.
And the goal is simple. Pull out the key info business segments, financial highlights for the last fiscal year, and shareholder return plans.
Let's get straight to it.
Okay, let's dive right into those business segments then. 3 core divisions, right?
Correct. Wealth management, investment management, and wholesale.
Can you give us the top-line revenue for each, just to set the scene?
Sure. For the fiscal year 2023-24, wealth management brought in $402.4 billion.
Okay.
Investment management was $154.1 billion. And wholesale was the largest at $866.1 billion.
Wow. Yeah, quite a bit bigger. And geographically, how does that revenue split?
It's pretty spread out. Japan itself is about 19%.
Mm-hmm.
The Americas contribute 22%. EMEA is 10%. AEJ, so Asia excluding Japan, another 10%.
Okay.
And then international wholesale makes up the remaining 42%. Big chunk there.
Right. So let's start with wealth management, the $402 billion one. What's the story there?
Well, a key thing is their shift towards recurring revenue. It's a definite strategy.
More stability, I guess.
Exactly. They've built up $23 trillion in assets that generate this recurring revenue.
$23 trillion, that's significant.
It is, and it now covers about 55% of their costs in that division. So it provides a nice cushion.
Makes sense. Are they growing their client base too?
They are, yeah. They highlighted growth in active high net worth clients and new accounts.
Oh, okay.
And that helped drive a 50% year-on-year jump in what they call flow revenue in the last fiscal year.
50%. That's quite a leap.
Yeah.
Any external factors helping there?
Definitely. The rising Japanese stock market helped, no doubt.
Right.
And the introduction of the new NYSE program also gave things a boost.
Right, the tax advantage savings account.
Right.
What about looking forward, say, to 2030?
They have specific initiatives.
Yeah.
Grow those high net worth active accounts, onboard new clients there, acquire clients in the emerging wealth segment, and build out a sustainable digital service model.
Digital is key everywhere now, it seems.
Absolutely. And they often mention their partners, their advisors, highlighting their skill level as a real strength.
Okay, good overview of wealth management. What about investment management? You said $154 billion revenue.
That's the one. The big headline here is assets under management, AUM.
How are those looking?
They hit a record high, $89 trillion.
89, wow.
Yeah, and interestingly, that actually met their March 2025 target a year early.
Oh, ahead of schedule. So what's the focus in this division?
It's really about developing world-class products and enhancing their investment capabilities globally.
To drive profits, ultimately.
Exactly. The end goal is to increase income before income taxes from investment management. They're focused on high-quality funds, competitive performance. They even publish something called a fund review for transparency with clients.
That's interesting. Any specific product examples?
They mentioned developing specialty credit products like the Nomura Credit Opportunities Fund or NCOF, so targeting specific niches.
Okay, got it. Now the big one, wholesale, $866 billion revenue. What's the focus here?
Well, first off, they emphasize their leading position in Japan. That's across fixed income, equities, and investment banking.
Their home turf advantage.
Right. But as we saw with the revenue split, the international platforms are really the engine now. Over 2/3 of the global wholesale revenue comes from outside Japan.
So stability is important here too, I imagine, given the size.
Very much so. They've made significant progress there. They actually beat their 2023 Investor Day cost savings target by over 50%.
That's impressive, cutting costs ahead of plan.
Yeah. And they also pointed out a very low percentage of loss-making trading days last year, only about 1%. Suggests better risk management.
Okay. What are the long-term goals for wholesale?
They're aiming for a through-the-cycle pre-tax ROE of 8–10%.
Return on equity.
And getting the cost-to-income ratio down to around 80%, basically by becoming more efficient as they scale.
Makes sense. Any strategic shifts within wholesale?
Yes, they want to diversify the platform, move towards more resource-light areas like advisory, and also connect more with wealth management. Plus, focus on lower volatility, higher return businesses like spread products and equity products.
So less reliance on the big macro trades.
Kind of. The target is to get about 70% of revenues from these non-macro products by 2030.
Interesting shift. Any other specific ambitions?
Yeah, a big one in Asia. They want to become a top 15 wealth manager there.
Top 15.
Yeah, with a target of 60 billion US dollars in AUM. The idea is better synergy with their markets and banking arms.
Right, connecting the dots.
And within investment banking specifically, they're focusing on deepening coverage in newer subsectors like ag tech and digital infrastructure.
Always chasing the growth areas.
Oh.
So pulling it all together, are there overarching strategies or challenges across the whole group?
Definitely. It all falls under their Reaching for Sustainable Growth Management Vision 2030.
Right. You mentioned the targets earlier, 10% ROE, 500 billion income before tax by March 2026.
Exactly. A key part of getting there is expanding into private markets.
Supplementing the public market business.
Precisely. Other themes include strengthening the global strategy while leveraging Japan, increasing stable revenues, getting divisions to work together more, investing in new growth areas like laser digital for digital assets,
So that I mentioned.
and trying to deliver value that also tackles social issues, tying back to their purpose statement.
Sounds good, but are there challenges acknowledged?
Oh, absolutely. They know achieving this won't be easy given, structural changes in finance and just general global turmoil.
Right point.
They also highlight their diverse talent as a core strength. They're doing things like secondments to venture firms to help develop employees.
Interesting approach to talent development.
And finally, maybe unsurprisingly, IT strategy and cybersecurity are flagged as critical, essential for risk management and just running efficiently.
Can't run a global bank without solid tech and security. Okay, let's shift to the financials for FY 2023-24. What was the bottom line performance?
Pretty strong overall. Net revenues were up 17% year on year,
17%, okay.
reaching $1,562 billion. Income before income taxes jumped 83%.
83%, wow.
Yeah, landing at $273.9 billion. And net income followed, up 79% to $165.9 billion.
So profits saw a really significant boost. Did ROE improve?
It did improve to 5.1%, still below their long-term target range, but moving in the right direction.
Okay, can we break down the revenue drivers a bit? What caused that 17% increase?
Sure. Commissions were up strongly, 30.1% to $364.1 billion.
Why was that?
Mainly higher activity in stock and investment trust purchases by clients.
Okay, what else?
Fees from investment banking had a massive jump, 53.1% increase to $173.3 billion.
53%. Where did that come from?
Mostly equity capital markets ECM, helping companies issue stock and advisory services, particularly strong in Japan.
Right.
Asset management and portfolio service fees also saw healthy growth, up 14.2% to $310.2 billion. That reflects the higher AUM we discussed.
Makes sense. Anything go down?
Well, net gain on trading actually decreased by 12.7%.
Okay.
Down to $491.6 billion, but they noted it remained at a high level overall.
So still a big contributor, just not as high as the previous year.
Exactly, but the really huge mover was interest and dividends.
How much did that change?
It increased by 135.1%, a massive leap to $2,620.9 billion.
Whoa, what drove that?
Primarily the impact of rising global interest rates on their net interest income. That was a major factor in the overall revenue lift.
Gotcha. Any other key financial metrics worth noting, like capital strength?
Yeah. Their CET1 capital ratio, that's a key measure of bank resilience, was solid at 16.2% at the end of March 2024.
Sounds healthy. And you mentioned cost management earlier.
Right. They hit that $50 billion cost reduction target for March 2025 a year early.
That's a definite positive.
And they're not stopping. They're aiming for another $12 billion in savings, focusing on things like location strategy and integrating IT infrastructure.
Continuous improvement focus there. And AUM, just to reiterate.
Record $89 trillion in investment management, as we said, with that longer-term target of $129 trillion.
Okay. Solid performance, cost discipline, growing AUM. How does this translate into value for shareholders? What are the plans there?
Good question. For the fiscal year we've been discussing, FY 23-24, they paid out $23 per share in dividends.
And what payout ratio is that?
That works out to a dividend payout ratio of 42%.
Okay. Any share buybacks?
Yes, quite significant. They executed a 100 billion share buyback program during the year.
100 billion. So dividends plus buybacks.
Exactly. That led to a total return ratio of 102% for the year, basically returning more than their net income to shareholders.
Wow, 102%. That's substantial. And you mentioned the PBR, price to book ratio.
Yeah, they noted it has improved as the share price rose, which is obviously linked to this performance and the shareholder returns.
What about going forward? What's their stated capital policy?
They're targeting a dividend payout ratio of 40% or more,
Okay, similar to last year's actual.
and a total payout ratio, so dividends plus buybacks of 50% or more.
50% minimum target for total returns.
Correct. And they added some flexibility there. If they consistently beat those targets,
Hmm.
they'll consider using the excess capital for, well, more risk-taking for growth, strategic investments, or even further shareholder returns.
Options on the table if performance stays strong.
Okay, so considering all the segment strategies, financials, the shareholder returns, what's the overall assessment looking ahead for Nomura?
Well, there are certainly positive signs. You've got the improving backdrop in Japan's economy and markets, which helps, right? That provides a bit of a tailwind.
And management seems very focused on improving profitability and capital discipline. That push for a sustainable ROE above their cost of equity, around that 8% mark, is key.
Getting that return consistently.
Exactly. And their efforts to smooth out earnings volatility by stabilizing and diversifying revenues, that's also important for long-term perception and performance.
Less boom and bust.
That seems to be the goal. And they know they need to address the PBR being below 1. Increasing ROE and improving capital efficiency are the direct ways to tackle that.
So the pressure's on to deliver those ROE targets.
Absolutely. That long-term goal ROE of 8–10% or more and 500 billion income before tax by March 2026, that's the benchmark everyone will be watching.
Okay, so to quickly recap, we looked deep into Nomura's 2024 integrated report. We saw clear strategies for wealth management, investment management, and the large wholesale division.
Focusing on things like recurring revenue, AUM growth, cost discipline, and diversifying the wholesale platform.
Finances look strong in FY 23-24, driven by investment banking fees and especially net interest income. The trading was slightly down.
Right, and solid shareholder returns with dividends and significant buybacks, plus a clear forward policy.
As they head towards that 100-year mark, the focus on sustainable growth and returns seems paramount.
Definitely. It leads to a final thought, perhaps. Considering their global reach, their moves into digital assets, sustainable finance,
Yeah.
what are the really big opportunities, but also the potential hurdles for Nomura as it steps into its next century, especially in this super interconnected, rapidly changing financial world?
Something to think about. How does a giant institution like Nomura navigate the intersection of global finance and, well, broader societal changes and expectations?
Exactly. Food for thought.